Default rates are absolutely exploding, but they're just not calling it defaults. They're calling it negative amortization. And that's what we're going to go into in today's video, and we're going to talk about. So let's first of all define what negative amortization is. Negative amortization is a financial term referring to an increase in the principal balance of a loan caused by failure to cover the interest due on that loan. For example, if the interest payment on a loan is $500 and the borrower only pays $400, then the $100 difference would be added to the loan's principal balance. This was something that was going on in the US, which led to the global financial crisis, and it's happening right now in Canada. And essentially, it is like a default. When you have somebody who can't even cover the interest on their payment and their loan balances are increasing, that's a shadow default, in my opinion, and it means massive, massive problems for the banking system in the future. So let's see what our friends over at the Bank of Canada are thinking about what's going on right now. Do they really acknowledge what's going on? Let's take a look here and see. So, the Bank of Canada is investigating a growing trend of borrowers extending their mortgage amortization periods amid persistently high interest rates and ongoing inflationary pressures. During an appearance at Parliament's Standing Committee on Finance, Bank of Canada's senior Deputy Governor Caroline Rogers was asked by Conservative MP Adam Chambers whether she was concerned that as much as a quarter of some lenders' mortgage portfolios have amortization periods well beyond 40 years. And this is something that we want to hear what they think of that as well. So let's see what they said. Rogers told the committee the Bank of Canada asked this very question of several unnamed banks the previous week. We know which ones. It's obviously your big five and the rest of them. And that lenders are concerned about growing amortization periods. Now, it's interestingly enough, I filmed a video yesterday about the OSFI, how they're just completely asleep at the wheel. And when you watch that video, just remember back to this, that they're flagging concern. The Bank of Canada is flagging concern, and so are the lenders as well. Nobody's doing anything about it, though. It's just absolutely hilarious. These people are insane. They want the system to crumble, obviously. It's almost like it's orchestrated. So anyways, I think the banks are acutely aware that mortgages are not getting paid down, that are not getting amortized down is not a sustainable situation over the long term, Rogers said. But as we understand it, they're working closely with these borrowers. But you just said that they are citing risks to it as well. This makes absolutely zero sense when you put two and two together. Working with borrowers, again, just so vague. That just does not mean anything, guys. It doesn't mean anything. I mean, this is a financial crisis in the making, and this could be what the yield curve is predicting. Honestly, I think this is a huge, huge problem. And as you'll see, the stats are just baffling about this. Absolutely baffling. And here they are. Major lenders like RBC, BMO, and CIBC are seeing sharply higher percentage of their mortgage portfolios with amortization periods north of 30 years. None of these banks had mortgages with amortization periods over 30 years in October 2021. As of the fourth quarter, roughly 30% of their mortgage portfolios had amortization rates above 30 years, meaning loan balances are increasing, meaning people aren't paying down even the interest on their loan. This is absolutely insane. And in the sort of environment and super bubble that has been created in Canada, those are sort of the rates of default that you would actually expect, because when you go back to the US, which was in fact a smaller bubble when you compare it to size of what Canada has grown here, you can see here that default rates, they hit a high of 11.5%. And that was 2 years after the global financial crisis in October 2008, where everything kind of completely fell apart and became visible to the masses. However, people were still talking about it back then. Everything that was happening, the fact that it wasn't good, all the risks in the financial system. Even the mainstream news started to pick up on it towards the end of it. But nobody really did anything about it. No, it's like everybody just waits until the system just completely screws up and messes up, and then they come in there and try and fix it with their new tools that they have. All right, so let's see what else they're saying here. So 30, I mean, that is insane. 30%. Just think about that. You're talking about three of the largest banks in Canada, and over 30% of mortgages and negative amortization. Wow, that is insane. People aren't able to pay their mortgage. They're in default. Everybody's afraid to talk about this. I'm calling this a shadow default because it's kind of happening in the shadows. Nobody's talking about it. No, I mean, they can't work it out. Even the central planners and authoritarians, they can't work it out. But we can. We can work it out. We know what's coming. We know the yield curve is flashing like a major crisis is going to occur in the Canadian economy and in the economy globally. We don't know what that crisis is, but certainly it could be a commercial real estate crisis. Certainly it could be a crisis like this, or one could lead into the other, in fact. So let's continue on and say what they're saying. All in all, McClem said most people would consider the bank's current economic projections for 2023 to be the so-called soft landing cited by economists over the last year, a period of very weak economic growth instead of the retraction that signifies the beginning of a recession. Well, we're kind of stagnating in growth right now, and the GDP numbers, they're not accurate at all. Again, those numbers are massaged and fiddled with by the central planners. And as time has gone on, that has become more and more of the case. And as government intervention increases and the size of government increases, then of course you are going to see the GDP numbers get affected by that as well, which is not good at all. So I think it's kind of interesting that they're saying this. And he says something which I just could not believe, guys. McClem said borrowers renewing their mortgages this year will feel the bite of higher rates. Yes, I agree with that. The response to a 4.5% interest rate depends largely on a borrower's financial situation. And the Bank of Canada's own research suggests poorer households may be taking longer to pay down their mortgage. Right. But where is the solution to that? And here is the real, nutty thing that he really said. McClem pointed to Canada's long-standing lack of robust housing supply and the pain of higher interest rates as reason for price declines. Wait, that just doesn't make sense at all. So he's saying because we have no housing supply, it's like there's a lack of housing supply, prices have gone down. I mean, I think they'll just say anything at this point and people would just go, yeah, that makes sense. That makes sense. You went to where? Harvard or whatever Ivy League school or wherever and learned broken economics. I mean, broken economics, it's just insane, guys. I think it's crazy that we take the value of what they say and we put it so highly. Because really, it's not that way at all. It's like I said, they just don't have a clue, or they do have a clue, and they just want the system to break down so they can come in there with a new solution like a central bank digital currency, which is no doubt on the way. We already know it's on the way. We do need, over the long term, to deal with housing supply. That will be one of the most important things to relieve pressures, she told the committee. So it's really interesting that once again, they're talking about the housing supply. Obviously, it depends on which market you're in right now. I mean, gosh, if you're in Calgary and probably the same in Edmonton as well, it's like they're trying to build a new city around here, but around the existing city. But obviously, if you're in other places, they have really horrible housing supply issues. Places like British Columbia, for instance, have really bad housing supply issues, especially on places like Vancouver Island. So there are areas and pockets that have supply issues, but in places like Vancouver and Toronto, what they don't have in supply of single family homes, they have in condos. They just build upwards in terms of condos. And the problem with doing that is you just attract more and more investors. And obviously, we know there is a ton of bureaucracy when it comes to Canada's housing market. Getting building permits is incredibly expensive and difficult to do in most provinces. And it's because of all that red tape that things aren't getting built as fast as they would. But the reality is there is still actually quite a lot of housing supply in Canada. And when you have a recession, which they're not acknowledging, you have to remember this, you're going to have households consolidating. So you're going to have more people in one household. So there's less demand for that actual supply. And then also on the immigration side of things, you can actually have those trends reverse. You could have immigration pull back, or they could just fill it with extremely you just fill the targets basically with poorer and poorer people to meet their targets. But that's not really going to have a large impact on the type of housing supply that me and you are talking about right here. But yeah, you've just got to think of it in terms of that, because the immigration situation, that's in a bubble too. And when the economy bursts, you're not going to have loads of people wanting to move here. In fact, quite the opposite. You have a lot of people leaving because they'll go back to their own countries if it's more prosperous there. So that's an interesting note. Now, I want to take you over to this, which is history of failures in Canada's banking system. Because when you look at the history of failures, and the yield curve is as inverted as it was in the late 80s. Obviously, 1987 was Black Monday. That was when the stock market absolutely crashed. And that was in October, I believe, of 1987. And then after that, and even before that, in the 80s, you had just all these banks failing. And the yield curve inverted massively, like right before right around this time here where my mouse is. And you can see that over half of the financial institutions that have gone bust in Canada were during that period of time. When you look on this list, it's even more than that. You can see right here what I'm talking about as well in terms of the yield curve inversion that I'm talking about. So you can clearly see how that's just completely down there, heading towards the same levels we saw during that prior banking crisis. So we know what's going to happen here. We know how this is all going to pan out, guys, and it is not going to be good for the economy, and it's not going to be good for the financial system either. And once again, we've got the regulators, we've got the Bank of Canada, we've got the central planners who are just completely clueless to what is going on here, and that it's the recipe for a massive disaster, a depression, if not a severe economic recession. I think we're already in recession right now. It's just the case of whether we're heading into a depression or what really comes next, but we'll see. So anyway, I want to thank you for watching. If you've enjoyed this video, you might like that video there. You might also like that video there. I'll see you in the next one. Take care. Bye-bye.